Scalping is a trading method in which traders try to make profits as quickly as possible. Unlike some traders who keep buy and sell positions open for days, scalpers sometimes keep a buy or sell position open for only 5 minutes. This way they can make profits quickly and do not have to take the long-term trend into account. In this video, I explain such a scalping strategy. Hi traders, my name is Kane and welcome back to the Scalping channel. As I just mentioned, I explained to you in this video a complete scalping strategy that can start to give you huge profits on a daily basis. It is wise to trade this scalping strategy on an asset with a lot of volume. In this case, I am trading sold versus used on the 1-minute time frame. We use 3 indicators for this scalping strategy. The first indicator is the STEC. The creator of this indicator also calls it the better MACD. The second indicator we add is the EMA, or the moving average exponential. The third and final indicator we are adding is the trend trader strategy. We only need to adjust the EMA indicator for this scalping strategy. Go to the settings and change the length from 9 to 200, and then you can choose to change the color of the line. Once you have done this, you are theoretically ready to start trading. This scalping strategy is built on 4 rules. I start by explaining a buy position, and the first rule before you can start opening a buy position is that the price must move above 200 EMA. We can see this here. This is because this means that the price is generally moving in a bullish trend. Rule 2 is that we want to see a pullback in the price. We can easily see this by looking at the trend trader strategy indicator. Namely, if the candles drops below the blue trend trader strategy line, it means that there is a pullback. At the same time, we know that the overall trend is still up because it is moving above the 200 EMA. So the market is just cooling down for a while, giving us room to buy cheaper while the market is actually still rising. Rule 3 implies that the candles are rising back over the blue line again. This means that the small decline within the rising trend has most likely come to an end and the price will continue to rise again. At the same time, for Rule 4, we want to see that the steep key indicator is also colored green. This means that buying volume is returning to the price and we can be almost certain that the price is going to rise back up. In this example, you can see that the price moves above the 200 EMA and then makes a decline below the trend trader strategy indicator. Then it rises again over the trend trader strategy indicator, and at the same time, we also see that the steep key indicator is colored green. So at that point, we can open a buy position. Since this is a scalping strategy, we want to keep the buy position open as short as possible and take profits as quickly as possible. Therefore, we use a risk-reward ratio of 1. We set the stop loss below the last low, that is here, and then place our take profit 1 high. Now suppose you want to risk $100 on this buy position. You can also win $100. As you can see, this buy position closed with a profit within just a few minutes. After the buy position is closed in profit, you can just look again at a new buy position. In this case, we see it here. The price again drops below the trend trader strategy indicator and rises above it again here. At the same time, we see that the price is still moving above the 200 EMA and the ST indicator is also colored green. So we open another buy position and set the stop loss below the last low. Then we place our take profit target 1 high. This was another profitable position. And if you look closely, you can see that a little later on the same day, we were able to open another 3 successful buy positions. As you can see, this scalping strategy has a low risk-reward ratio, but a very high win rate. And that is very good if you want to implement a scalping strategy, because after all, we want to make profits as quickly as possible. Of course, you can also implement this strategy in a falling market. In that case, you simply have to reverse the rules. The first rule now is that we want to see the price move below 200 EMA. Next, we want to see a rise. We can characterize a rise because the candle now comes above the blue line of the trend trader strategy indicator. As a third rule, we now want the candle to fall below this blue line again. And at the same time, for Rule 4, we want the STEETS indicator to be colored red. If all this happens, we can open a sell position. In this case, I now set my stop loss above the last swing high. This will ensure that I sell my position in time if it does start to rise instead of fall. Then I place my take profit target 1 low, which again gives me a risk-reward ratio of 1. And as you can see, this was another great time to open a sell position. And if you look further, you can see again that you could open multiple sell positions which were all profitable. What I like about this scalping strategy is that it doesn't matter if the general trend is up or down. We only have to look at the 200 EMA to know whether to open buy or sell positions. By the way, if you want to follow up profitable buying and selling positions, you can follow my free Telegram group using the link in the description. In this group, I share for free the buying and selling positions I make. It doesn't cost any money. It's absolutely free. So quickly, click on the link in the description. That's it again for this video. I want to thank you for watching, and I look forward to seeing you in the next one.